Hey everybody, I'm going to run through this weekly presentation that I do every week and try to make it fast. So, 2024, as always, continuation of the bull run. That's what I said at the beginning of the year. Everything looks in line for that. Here's your normal patterns. One of the things I want you to pay attention to on this slide is you can see the dotted lines are the election years, and the non-dotted lines over here on the right are the non-election years. You can see they always do better on election year, right? To me, this means buy the dip. And so between June, July, and August, this is your best 3 month period. So again, buy the dip. This is what I'm doing. We just had the second best 100 days ever. So if you were with me when I said this beginning of the year, continuation of the bull run, or if you were with me since the last October when I said buy this breakdown on the indexes and buy the dip, right? We're sitting pretty. We made a lot of money and it's looking good. So this is bullish for the rest of the year. You can see over here that what happens, usually after this type of return. And you can read this slide; it explains it a lot. One of the things I do want to talk about is earnings. So one of the things that I've noticed in earnings is from this last quarter is we're starting to see some weakness in the consumer. So things like McDonald's, Yum Brands, all of these companies are like, all right, we're starting to see a pretty big slowdown. One of the first things that people start to take away is fast food. I own Subways, and what people would start doing is instead of going out to nicer places like, I don't know, whatever you think is nice, Outback or whatever, they would start coming to Subway because they didn't feel like it was a fast food, and then they didn't spend $100 on a meal. Well, fast food giants are struggling, and some SaaS companies are struggling as well. If you don't know what SaaS is, it's software. Excuse me, started coughing there. It's software as a service, and so CRM took a hit, saying, "Hey, we're lowering the guide," and so our company is starting to dial it back as well. Well, one of the things to think about is this good or bad, right? We're looking for a Goldilocks scenario where the economy isn't too hot and isn't too cold. The consumer slowing down is good for inflation and possible cuts. However, it isn't good for earnings reports and company profits, right? If we're spending less and they're making less. So for the immediate future, I'm looking for a catalyst for rate cuts. And this week we've got jolts, right? We've got challenger job cuts, continuous jobless claims, initial jobless claims 4 weeks average, right? So we've got some labor reports that are coming out that hopefully will show a little weakness, right? One of the things to keep in mind is if things begin to show that our rate cuts are coming, right? Because we went from 7 at the beginning of the year, the market was pricing in, to 0. So if there's 1 or 2 on the horizon, I would be looking outside the magnificent 7 for performance. We need more breadth to come in. You can see over here this above 50 DMAs, right? You've got a few sectors. Do you remember a few months ago I said utilities were severely undervalued? Well, boom, they took off. I expect something like that to start happening throughout. You just need, the AI hype to calm down a little bit. Dell saying we're not making money off of AI. None of these companies are making money off of AI except NVIDIA, the chip sellers. And so if that continues to happen, people are going to really start questioning whether or not it's a good idea to be spending billions and billions of dollars every quarter on AI. And so I think you're going to start seeing some money get distributed to other places under the surface. So, for example, you guys know SWK is one of my long-term buys here. And let's see if I can pull it up here. What's going to happen if rate cuts start coming in? Well, people are going to start buying tools. They're going to start building houses. Houses are going to start becoming more affordable because rates are coming down, right? And so these type of plays, I think, will start to get some love, dividend type plays especially, because that's going to lower, right, what you can get from treasuries and stuff like that. So watch for this on the horizon. I have no idea if it's going to come this year or not, but if the data starts to show it, I think you're going to start getting some flow into those sectors. So some of the ideas that I am looking to buy and or have already bought is Fur. I like this company. It's a good company. I wish I would have gotten into it for a long-term play. I just missed it. I didn't get into it. And so what I do on these companies is It's like, let me see if I can start buying pullbacks. And I think that 200 is going to offer us a pullback. So I started buying Friday and last week into these levels, hoping to bounce them just like I did on the SPY. Remember I told you guys that we're going to bounce this. I was going to bounce the SPY, and we were looking for this box, right? This is where I was going to be buying. And so I'm expecting something similar to happen to FERG. So if I can buy around 522, 523, down to 520, maybe a little crack below 520 and break above, that'd be great. So think about that on FERG. If we could crack 200 and wash everybody else out that's using 200 as a stop, beautiful, let's do it. And I'm going to be absorbing and trying to sell into it. And the overall goal for this is to lower the cost basis down so I can set it, forget it, and just use it as a long-term buy. And just know that I've lowered my cost basis $20 or $30, so I'm not sitting at a 200 cost basis. I'm sitting at a 170. Same idea here on Apple. I love Apple. If I was only going to be playing one thing for the next couple of weeks, it would probably be Apple, barring any news or anything that comes out. The ultimate goal for this one is also set it and forget it, right? I've been buying all during this last month. They came out with a really good earnings report. Showing less loss of market share in China. If Apple does break down this flag area here, I will be buying into these pullbacks here, trying to, again, absorb lower cost basis, because I think we're going back to all-time high for Apple, and I want to be a part of that. One that is extremely strong is CB. This is Warren Buffett's that he bought, and it put in a rev strat, right? Put in inside week, broke down, and now just shot up. Make sure you use the VP levels to set profit targets, risk levels, and all of that. But I will be playing this 100% for a rev strat week. This is a mistype here on, it should say crowd. I didn't change it. So instead of AVGO was one that looked beautiful last week but just broke down. There was a few of them that did that. MRK, I think, was another one. So let's see if this week we can get a little catalyst to get money flowing into some of these other companies. So Crowd took a big hit, and I think it took a big hit because of CRM and just the weakness, right, in the consumer. I really like Crowd, and this is one of the companies that I bought a long time ago that it's a hold forever until material change. So like this is a set it and forget it. I don't even look at it. This is something that maybe I'm going to hand off to my kids. Maybe I'll sell in 5 years. 10 years, but I'm not in a hurry to sell any of this. This is one of my favorite companies in this sector. And so when it takes a hit like this, I always want to look at it. And I'm always willing to buy these dips. Now, the risk here is they've got earnings on 6-4. CRM took a 20% hit. This one's down about 12% from highs. So think about it from the negative perspective. If you can't take another 8-9% hit, you shouldn't get into it. For me, I will probably get into this before earnings. And if it takes another 10-12% hit, I'll add to it, because personally I think the CRM reaction was overreaction. I think it's going to come back up, but anyway, you need to be aware of all scenarios to have a fully thought out strategy, right? That's ultimately what game theory is. So for me, I'm going to be most likely buying this and holding through earnings, selling to open calls and puts, trying to lower my cost basis in case it does come down. I will be gladly to take the shares down here in 285, 290 range. Amazon. I think this one's worthy of a buy as well. You guys know Amazon's one of my buy and hold companies forever as well. If you're not willing to buy shares, the least aggressive thing that I would do is put on a vertical put spread down here. Which means, you think the stock's going to go up, so you would sell to open maybe a 175 and buy to open the 170, or sell to open a 175, buy to open the 172.50. That's ultimately what you're doing, and that play is you think it's going to trade sideways to up. But for me, I'm going to get a little bit more aggressive than that, and I'm going to play Amazon. Some of the ideas for the strat this week is, we've got a new month, so here's all your monthlies. There's a lot in here, and so what you have to decide is, do I really want to play all of them? I don't. I have alerts set for all of them, so I'll make the decision when it happens. But some of them I have just automatic buys and or shorts in. And for me, my favorite one's IWM, then XBI, DFS, ARM, and in this order. This is how I like them. and this is how I am looking to play them. As far as inside weeks, we have a few. My main watchers are JPM, RCL, Wix, and Reddit. UEC, you can see is an inside week within an inside month. So if you wanted to like front run that, there you go. RevStrat's up. CB is the one I told you about that I'm definitely going to play. And then ATR is another one that I'm willing to play. Now, one of the things I just want to tell you guys is a lot of times in June, sometimes at the beginning of the month, you get kind of a buying into the beginning of the month, and you get some sideways action, sideways to down action, and then a pop towards the end of the month. And so if you go back and you look at the normal June movements that I showed you at the beginning of the slide here, this is day 1, 2, 3, 4, right? So if you look at the S&P 500, which is this green dotted line, so look at these dotted lines. See how we're getting this pop up for the first few days, and then kind of sideways, kind of down, and then kind of a push into the end? That's what I'm thinking. I don't know if that's going to happen. I'm already long and strong the SPY. We caught the 520 dip, but be prepared for a quick push and then a pullback. And instead of thinking, hey, this pullback is tearing me up, think of, oh, this is more opportunity to make money in the future. All right, talk to you guys later.